All right, let's jump right in. Today, we're tearing up the classic story about fintech. You know the one, the nimble startup disrupting the slow-moving giant. Well, the giants are awake, and they're not just playing defense anymore. They are actively and very aggressively writing the next chapter themselves. Let's break down their playbook.
Okay, so right off the bat, let me ask you, when you think about the big traditional banks, what's the first word that comes to mind? Is it slow, clunky, maybe always a step behind? Yeah, that's the common wisdom.
Well, you might want to think again, because the moves they're making right now, they tell a completely different and way more interesting story.
First up, let's talk about Fidelity National Information Services. You probably know them as FIS. They are making an absolutely massive bet on the future, not just of payments, but of how we all buy everything. And when I say massive, I mean it. We're talking about a $13.5 billion deal to grab the issuer processing business from Global Payments. Now, this isn't just about getting bigger. It's a super strategic move to bring a huge amount of power and data all under one roof.
But honestly, that giant price tag, it's not even the real headline here. The real story is why they're doing it. FIS is all in on what's called agentic commerce. Just picture this: AI agents that can literally act on your behalf, that can shop around, negotiate for better prices, and then complete the whole transaction for you.
And this quote from the source just nails it. It really is like your bank handing you a personal, digital shopper that's on the job 24/7, always looking for the best deal for you. See, FIS isn't just processing payments anymore. They're selling a way for banks to stay totally essential in the age of AI.
And the potential here is just mind-blowing. McKinsey is projecting that this whole agentic commerce thing could be worth over $1 trillion in U.S. retail sales by 2030. So this isn't just a small bet. It's a huge gamble on owning the future relationship with the customer, keeping them inside the bank's world instead of losing them to big tech.
But of course, this entire grand vision hangs on one single thing: trust. I mean, will you, will I, will any of us actually let our bank's AI do our shopping for us? Now that is the real trillion-dollar question.
Okay, so while FIS is busy building the future with AI, our next giant is taking a totally different approach. US Bancorp is proving that sometimes the quickest way to get ahead isn't to build, it's to buy.
So US Bancorp has agreed to acquire BTIG, a global financial services firm. And let's be super clear, BTIG is no scrappy little startup. They are a serious, established player with deep roots in institutional trading, research, and investment banking. You know, the real core of Wall Street. This gives US Bancorp a whole new set of tools way beyond just checking and savings accounts.
And this slide just lays it out perfectly. You've got US Bancorp, who we all know is a classic Main Street retail bank. Now they're essentially bolting on a powerful Wall Street engine. It's a complete shift in their business model, trying to be the go-to bank for both everyday people and massive institutions.
I absolutely love this analogy from the source material. It just captures the whole vibe perfectly, right? You've got the chance for a much bigger audience and way more resources, but there's also that real risk of a culture clash. Can the nimble, aggressive culture of a trading firm really fit inside a giant, structured bank?
And yeah, the market is definitely seeing both sides of this gamble. The stock actually dipped a bit when the news broke. It's like investors see the huge potential upside, all that fee-rich business, but they're also holding their breath, worried about the massive headache of trying to integrate two totally different worlds.
And that brings us to our third and final giant, Goldman Sachs. Now, while the others are out there buying or building the future, Goldman is taking a different path. They're basically just reminding everyone that sometimes pure, raw market power is the ultimate strategy.
Goldman just dropped its quarterly earnings, and whoa, they were a total blockbuster. You have to understand, in the financial world, when Goldman reports its numbers, the entire ecosystem listens. Their performance literally sets the tempo for capital, for risk, for everything.
And just look at this chart. It says it all. Their earnings per share hit $14.01. To put that in perspective, they didn't just beat Wall Street's expectations, they absolutely smashed them. This wasn't just a win, it was a statement.
And this wasn't a fluke in one department either. They were firing on all cylinders. Investment banking fees up a massive 25%. Their asset and wealth divisions hitting record fee levels. And the cherry on top, they hiked their dividend, which is basically them broadcasting to the world, yeah, we're feeling very, very confident about what's next.
This last analogy really ties it all together so well. It's like a legendary rock band that's been around forever suddenly dropping a surprise #1 album. Even with all the new artists and new sounds out there, when the legends decide to make a move, everybody stops and pays attention. Their strength fuels the whole system.
Okay, so let's pull all this together. We've seen 3 different giants with 3 very different strategies. But when you step back and look at them all at once, a surprisingly clear playbook for 2026 starts to emerge. And here it is, a simple but really powerful playbook. 1. Bet big on the next technological wave, just like FIS is doing with AI. 2. Buy the firepower you're missing, like US Bancorp did. And 3. Flex the incredible power of your core business, exactly like Goldman Sachs.
So, what's the one big thing you should take away from all this? It's that for all the talk about disruption, the old guard is still very much in control. They have the capital, they're making the biggest deals, and they're ultimately underwriting the innovation that shapes the entire fintech landscape. It really signals that we're moving into an era of consolidation where sheer size and power matter most.
And that leaves us with one last and maybe most important question to think about. In this new game, when the giants are making moves this big, what happens to all those disruptive startups? When the giants awaken, who gets left behind?